안녕하세요. 미국주식으로 은퇴하기 미주은입니다. 시킹알파 파트너십을 구축하고 있는 약 7천여 명의 주식 전문 블로거들이 있는데요. 그 중에서도 최고의 위치를 차지하고 있는 앱 이코노미 인사이트의 버틀란드를 만나볼 시간입니다. 이분은요, 현재 앱 이코노미 인사이트라는 유료 커뮤니티를 통해서 2만 7천 명이 넘는 유료 회원에게 미국 주식 종목에 대한 정보를 제공하고 있습니다. 앱 이코노미 인사이트 회원들은요, 매달 그 시점에서 가장 투자 가치가 좋다고 판단되는 6개의 종목을 추천받게 되는데요. 오늘도 그 종목 중에서 최고의 줍줍 기회가 찾아온 한 종목을 공개해 주시기로 했습니다. 앱 이코노미 인사이트의 베스트 바이, 바로 시작합니다. Hi, Butlan, how are you?
Good. Thank you for having me, Charles. Good to see you.
Great, long time no see. So I heard you went back home to see your family members in France. How was it?
It's always nice for me, to go back to France a couple times a year. So in the summer, I enjoy the heat wave because here in San Francisco, we kind of have 2 springs and 2 falls. So I enjoy the hot summer in Europe.
Yeah, fantastic. Did you notice any changes in terms of economy or the pandemic situation there?
Yeah, I think, it's people are more comfortable with traveling. I was actually surprised, now people don't wear masks in the airport and in the flight. So that was a big difference there. Mm-hmm. And otherwise, it's clear that people are getting used to travel again. So that's at least something nice to see there.
That's great. The market situation has gotten very challenging recently. How are you dealing with this kind of difficult situation? Are there any changes with your investment strategies?
That's a great question, Charles. I think, here we're in a bear market officially in the US with the S&P being down 20% from the previous high.
Yeah.
So, the way I invest is over a multi-year time horizon. Usually I don't invest in stocks for less than 5 years. And the reason behind that is that if you look at history, even a terrible bear market like the Great Recession in 2008, mm-hmm. Basically, if you invested at the worst time, at the peak, 4 years later, you were still making money. The market was back to all-time highs. Mm-hmm. And so that's the very reason why people need to expand their time horizon so that they can play the game on their own terms and not have to get to a perfect timing in their entry and exits. So that's the way I play the game. So when I invest, I know for a fact that at some point in the cycle, there's going to be a bear market, there's going to be a sell-off. I started, my career in 2007, so didn't have much money to invest mm-hmm. back in 2008. So I'm really feeling the heat for the first time. But what I do like is this is how you get the experience, right? You have to go through these periods to really get to learn about yourself and how you can ride the volatility. So the key is to realize bear markets are part of investing. There are something we need to accept. Mm-hmm. And if we are in an average bear market right now, once you hit 20% down, usually it takes about 4 months to hit the bottom. So maybe we're already at the bottom. Maybe it's going to last a year. Mm-hmm. And we're back to all-time highs, usually 2 to 4 years after hitting down 20%. So those are numbers you want to keep in mind, right? Because that tells you how long the fact that there might be more pain in the near term. It could be worse before it gets better. So that's what I keep in mind so that I don't go too fast. I have a very stringent process. I invest a fixed amount every month. There is no timing in my strategy. I focus on buying great businesses diligently and holding on to them tenaciously. That's really the 2 core components. And right now, a lot of great businesses are significantly down and offering better entry points. So that makes me a happy buyer right now. So that's the silver lining.
All right. So it sounds like you haven't made any changes with your strategies. Then you buy fixed amount on a monthly basis, trying to get more stocks in your portfolio then.
Yeah, there was quite a few tweaks I made in the kind of companies I invest in, and that's going to be a great segue to the company that we're going to talk about today, because one of the focus I've decided to have lately is that we may be facing a liquidity crisis, where basically access to capital is becoming more challenging in a high interest environment. Therefore, the focus, at least on my end, has been on companies that have more robust balance sheet and that already are generating a lot of cash. Nice. The reason behind this is that they can sustain their growth path, even if they struggle a bit in the near term. If we are in a recession, nobody really knows. But even facing a recession, companies that already have strong cash flow margins and can sustain their business this way, that gives me a lot more comfort. So as I put new money to work this month, the next one, I want to focus on the high free cash flow margins, because that gives me a lot more comfort, given that we face an kind of an unknown period for now.
Sure. So I am aware that your portfolio is actually full of a lot of growth stocks. So I can guess that today we are going to talk about growth stock, but which has lots of free cash flow. Yeah. So shall we talk about which company we will be investing in this month?
Of course, yeah. So every month I highlight 6 stocks of my portfolio, my real money portfolio, to App Economy Portfolio members. Sure. And I choose them based on maybe attractive entry points or just the business momentum. And so focusing on free cash flow this month, one of the companies I decided to feature is CrowdStrike, ticker symbol CWRD. Yeah. The way to think about CrowdStrike, I think, is I don't know if you remember Sheryl Sandberg at Facebook. She was the COO at Facebook before. And when she joined Facebook, she said, when you find a rocket ship, you don't ask, where's your seat? You just hop on it. And I like to think that CrowdStrike is one of those rocket ships where early on, I think it was 2019, I started my position feeling like I was looking at a very special company. And, today with the sell-off post, 2021, CrowdStrike is really interesting again. And I'm going to try to show you why today.
Yes, please. We look forward to your presentation.
Awesome. Well, I'm going to share my screen just so that I use some of the slides. There are quite a few beautiful slides that the management team share regularly in investor presentations. So we can use some of that as a background.
Sure, please.
One thing that viewers should know about CrowdStrike is that it is a mission-driven company. This is something I love to see, because companies that have a clear mission, they tend to stay on track and to continue to innovate to serve that mission. And so for those who don't know at all what CrowdStrike provides, this is a cybersecurity company. And their mission is only 3 words, very clear: we stop breaches. I love that. This is super nice to see. So they basically protect their customers, their enterprise customers, from breaches. So very large companies use CrowdStrike to protect themselves.
Very straightforward.
Yep, exactly. So CrowdStrike is a leader of cybersecurity tools, right? And you can think of them as a company that was purpose-built for the cloud. We talk about cloud migration all the time. This is a very important secular trend. So what this management team believes is that other security products, they tend to be more expensive or too complex or ineffective because they are not built for the cloud. And so you may have heard of them before, because back in 2016, they were the high-profile company that figured out who hacked the DNC. So during the Democratic National Committee was hacked, and it was the company that helped them figure out that there were Russian hackers behind it. I'm going to just show you a little bit why I love so much CrowdStrike from a positioning angle. They like to present themselves as the leader in security cloud. So built in the cloud from the ground up since 2011. And they compare themselves to previous companies that have also embraced the cloud early on, as soon as their funding phase. So you have Salesforce for CRM in 99, ServiceNow and Workday are other examples. And I love the idea that I'm investing in CrowdStrike today the same way you could have invested in ServiceNow 5-6 years ago. That's if it does execute the way ServiceNow did, we're certainly looking at a big winner and a market beater. So that's a focus there. If we think about the kind of tools they provide, what we need to think of first is how they say Salesforce meets security. So they already have a leading position, and I'll show you why. But they are the new cloud angle for cybersecurity. And even though other companies are now doing the same, they are the first mover because they've been doing this since 2011. And that's going to be important. One key aspect you will hear about when studying CrowdStrike is the threat graph. So this is a proprietary tool that they use. Think of it like the brain behind their motherboard, their artificial intelligence tool. So the threat graph basically analyzes data that they collect when one of the customers would suffer a breach. And so when that happens, that big brain, that big AI brain that collects the data, sends immunity to all other customers immediately.
I see.
And every time a new threat occurs for one of the customers, basically that AI brain becomes smarter, a little bit smarter every time to protect for future breaches that could happen among CrowdStrike's customers.
I see. So which means whenever there is a new breach coming out, the AI will learn from that attack and then protect all the other customers automatically.
That's right.
Oh, that's very smart.
Yeah, and so you can think of network effects, as an economic moat where because the AI becomes smarter and the more customers join CrowdStrike, the more data is being sent to that AI tool, and so the smarter it gets, right? So becoming smarter over time sounds pretty great to me, and we can look at other things they do on this end. Management truly believes that the way they handle data in the cloud is really offering a superior use case for their customers because the data access is constantly protected. They keep collecting this data coming from the customers whenever a threat occurs, and they can reuse it. So those are our key components. I wanted to show you this slide because it shows the number of tools that the company has created over the years. And that's really what I love to see, because more tools being released over time means that when I invest today based on what I know, 2-3 years from now, there may be other tools that are created. So we are really stacking the deck in our favor here, because more tools released means the success of the company a few years down the line, maybe for reasons we are not going to talk about today. And that's really always something I seek in all the investments I cover. I like to use the example of another SaaS company called HubSpot, ticker symbol HUBS, that I started investing in 2017, and they released only a few months later a new CMS tool, and they became the #1 company in CMS today. So 2-3 years after launching their CMS tool. I'm using HubSpot as an example to say there is a huge luck factor component when you invest in a company. And if a company keeps consistently releasing new tools that end up being leaders in their category, you know that you're looking at something very special, right? And so I do want to see that. When you think about focus of CrowdStrike, what they do is called endpoint security. So what does that mean? You might ask. An endpoint is basically any tool that you connect to the internet, right? It could be a workstation if you're at work. a server, your smartphone, the computers we're working on right now, or any Internet of Things tool, right? Yes. And so all these devices that we connect to the internet, they are technically a threat for a company because they are an access point for hackers. Sure. And so that's how to think about all these tools you see at the bottom. These are endpoints. So that's what you understand when you hear endpoint security. Mm-hmm. It covers everything. Sure. And at the top here, you see all the tools that they offer to protect those endpoints. And it covers, they expanded over some single point solution offered by other company like Identity or Zero Trust. Basically, those are systems that assume you are a threat as an employee or you are a threat as a vendor connecting to the company's systems. And they make sure that that threat is in control or that they double check on everything. Mm-hmm. Some of these tools have been acquired, small acquisitions here and there. So that's not all organic, but that's besides the point because the company has been capital efficient, and we'll discuss that a little bit more later. We have to cover management, of course. It's one of the topics that are, in my opinion, often overlooked in a company. So this is a founder-led business. George Kurtz has a huge experience in the cybersecurity industry, and he launched CrowdStrike in 2011. He still have 31% of the voting power, still very much involved. And when you look at the Glassdoor ratings, this is basically as good as it gets, 4.4 out of 5 stars, 95% approval. One of the perks of working in Silicon Valley, like I do, I have all my friends, working for different companies. And I've learned to know the difference between a 60 rated company and an 85 rated company. There is a very big difference in terms of talent retention and capacity to hire. So I really put a lot of emphasis and value on that. One of the qualities I seek when I look at an investment opportunity is the long-term potential. CrowdStrike kept increasing its total addressable market over time. So at the IPO, it was only 25 billion. That was their estimated market potential, and they kept increasing it as they add more tools to their toolkit. Mm. And when they look at calendar year 25 and beyond, they keep basically expanding it with their new tools. So that's something I love to see because it seems like the ceiling keeps getting higher. And when I invest for a 5 to 10 year time horizon, this is something I want to see.
Wow. So which means when we invest in certain companies, usually we call it TAM, right? Total addressable market is also growing, right? So a certain market will be growing, but in CrowdStrike cases, original market is growing. Plus, they have they keep adding a new market, which will be growing as well. So the size of the market is actually growing exponentially. Is it correct?
That's absolutely right, Charles. So even maintaining market shares would be enough to grow with the market, but they add new markets to their overall addressable scope. Mm-hmm. So definitely a positive trait here.
So which means if they can maintain their market share or at least maintain or improve the market share, their business opportunity or the revenue will grow dramatically.
That is my expectation. Mm-hmm. It will normalize. I think like any other business, there is a maturity component eventually. Mm-hmm. Yep. They could recreate that second win or that third win. We talk about the S-curve all the time, how it plateaus, but then can start again. And because they add more tools, they are giving themselves a shot at it. And we could use Salesforce as an example because Salesforce branched out of their CRM origins, acquiring Slack, for example, and going toward communication. Mm-hmm. So that's kind of how I think about it, where if you add tools to your toolkit, you can certainly expand your growth over much longer than a normal maturity cycle.
All right. So in your opinion, when are we going to face that normalization of the revenue in CrowdStrike? Is it coming soon, or we still have a lot of time to go there?
That's such a great question. I think there are two components to consider because as we recently discussed, we may be facing a recession, right? And so we have to consider that a company like Salesforce is still growing about 20% year over year right now. And it's been in the public since 2004. So that's great news here. It could actually grow sustainably for a very long time. So that's for the long term, I think, the great news. However, in the near term, if we look at the Great Recession, even a company like Salesforce that was growing strong, they saw a rapid slowdown, and the growth basically, there was an attrition going to zero. And that didn't last long. It lasted only a few quarters. But I think it's important to keep in mind, because if you become a CrowdStrike investor and you panic in the next couple quarters because the growth goes down in the context where all software companies are being challenged, it will be important to consider that this is not necessarily a CrowdStrike specific challenge, and that is more market-related slowdown. So I do want to point that out, because I don't know what's going to happen in the near term for the market conditions, and it could be a misleading element, right? But when it comes to the long term, I remain very positive on the fact that when I look at ServiceNow, Salesforce, I know that even 10 years down the line, this is a company that has a recurring revenue, and we'll talk about that, and that can maintain this growth because existing customers spend more, and they can keep expanding with new markets, notably mid-market.
All right, then. Okay, great. So let's keep talking about it.
If we look at the three layers of the market they are trying to penetrate, those customers are primarily enterprise at this point. So they are the biggest companies in the world about. That's really where the focus is. And then later on, they can slowly expand toward lower tier, so mid-market and SMBs. That would be the goal for them. So right now, the key to appreciate CrowdStrike's positioning in the landscape is that they are first and foremost tailored for very large enterprise and protecting them.
I see. This one reminds me Cloudflare, because the Cloudflare is approaching opposite way. They are working on the number of the customer first by offering a lot of free services and very low margin business with a very cheap price. And then they are working on to build up the more big companies, big customers going into the enterprise. So I can see the CrowdStrike has a different strategy. They are working on the large company first at the moment.
That's right. And, it gives a little bit of an edge to CrowdStrike in terms of entering the public sector and working with the government, because when you're already working with the very big, the biggest names in the world, it gives you that credibility that helps also push you into public sector. So I think that's a plus there. Also, obviously, it helps the margins working with larger clients. Once they are secured, the volume here is more significant. And Cloudflare, for example, is not cash flow positive right now. So this is not a company I would invest in at this very moment, just because they are more challenged on their cash flow margins. And probably the go-to-market is one of the reasons.
I see. Sure.
So we were just talking about how CrowdStrike is crushing it from a market share and market position angle. So they are literally the number one endpoint security company in the world for the past 2 years. Their market share has increased steadily, estimated by management at 14.2% in the investor presentation they did last year. So really nice to see. It's just, when I get to choose, why would I invest in a lower tier company when I can invest in the absolute leader that is the wind behind their back and crushing it? And that's what CrowdStrike is right now.
Okay, so as you mentioned earlier, the CrowdStrike is expanding their business model dramatically, but this market share is only solely on endpoint security, correct?
Yeah, so endpoint security market share, that's correct.
I see. The main business model.
That's right.
Okay, great.
When we look at the endpoint security landscape, we have also evidence from third-party intelligence analysts that really put CrowdStrike at the top of the pyramid. Here I'm illustrating it with the Forrester wave. So they are ahead of even Microsoft in terms of their positioning and their strategy. So this is really impressive and nice to see. You can see on the graph some legacy providers like McAfee closer to the bottom, right? So they are really crushing it right now. They may not stay that way forever, but at least this is as good as it gets when you look at the positioning today.
The last time we talked about UiPath, right? So when we learn about different SaaS company, what make me amazed is Microsoft, because every time we talk about the market reputation, Microsoft is always number 2 in different area of business.
Yeah, no, it's one of the best companies on earth, of course. And Satya Nadella has done such an amazing job, shifting to the cloud and really put the focus there. And the other chart I'm showing you right now is also going to be very kind to Microsoft. This is some highlights from JP Morgan's CIO survey. So they ask the people in charge for these spendings, IT spendings, where they are seeing their future expenses in 2022. And CrowdStrike, one of the top mentions in terms of intention to increase the spending on the software, right? So you can see CrowdStrike number 4 on the graph. So only 3 companies are ahead, and you can see basically the hyperscalers and Snowflake are the only companies that are in CrowdStrike's category.
So this is the CIO's intention to spend money in 2022.
Correct. Yes. So expectation to increase. 47% of the CIO surveys, the CIOs that have been surveyed, intend to increase their spending on CrowdStrike.
I see. So those companies are already existing customers then.
Correct. Yeah. When there is less than 20 mentions, they don't cover them on the graph. So there could be companies growing faster, but that are just not well established yet, right? And you were just mentioning UiPath, a company. I'm an investor in UiPath, and they are actually up there. They are pretty well positioned. Switching from the business to a little bit more how they make money, I wanted to cover how they qualify their most important KPI as the ARR. That means annual recurring revenue.
Yes.
And so that's always what I want to see. Recurring revenue sounds like music to my ears. So it means that this is basically an extrapolated annualized basis of the contracts they've already signed with customers. And so it tends to be a leading indicator of future growth because revenue eventually catches up with those contracts. It's extrapolated forward. And so that's really what I focus on every time I open an earnings report from CrowdStrike. I look at the ARR. And so the 5-year compound annual growth rate is 97%. So this is where you can use the mind-blown emoji right there. We really see an exponential growth for this business. And even though it will normalize, at least the past 5 years have been amazing.